Bismillahirrahmanirrahim. Today we are going to start the first online lecture of auditing, and the topic that we are going to discuss is the work of practicing accountant. What does it mean? It means that what accountant is doing, what types of duties he is performing in the society. Different type of duties he is performing. Here, although auditing may be an important part of the work of an accountant in practice, other areas of work include the following. Now keep in mind, auditing is one of the work that an accountant is performing. He is also performing other duties. Just auditing is not the work of an accountant. There are lots of duties that he is performing, like provision of accounting service, taxation services, like auditing services, provision of advice in internal control system, financial advice, profit forecasts, and liquidations. So these are different duties performed by an accountant. And auditing is just a part of their work. The first duty that accountant is performing, and keep in mind one thing, we are talking about chartered accountants. The first duty that auditor is performing is provision of accounting services. Now, what does it mean? It means there are lots of small firms, and these firms, it is difficult for them to hire an accountant, because these chartered accountants, they are taking high salaries, $3,000, $4,000, $5,000. So for a small firm, $4,000, $5,000, it is a big amount. So it is difficult for these small firms to hire an accountant. So what are these small firms doing? These small firms, they are taking the services of some professional firms, these professional auditing firms. These auditing firms, they are sending their accountants, their employees, they are going to these small firms and maintaining their financial record, each and everything, making their financial statements. And keep in mind, they are not going there permanently. They are going there once a month, twice a month, like this. So see here, many firms are too small to employ accountants and rely on professional firms to prepare their financial statements, maintain their basic accounting information, or the maintenance of computerized records, which can provide such information. So here he's telling you about all these things, that these professional firms, they are sending their employees, go to this small firm, maintain their financial statement, maintain their accounting record, and these small firms, they are giving them some fee for doing this work. So see, if you will calculate, suppose an accountant is taking $4,000 monthly. So yearly it will become $48,000. So $48,000, it is a big amount for a small firm. So they can't afford this thing. So that's why what are they doing? They are relying on these professional firms, and they are taking their services. So accountants are a simple accountant. They are taking the services of an accountant. That accountant is going there and he's providing these accounting services. The second service that an accountant is providing is taxation services. Now, preparing taxation computations and agreeing them with the inland revenue, provision of advice to minimize tax liabilities and tax planning. Now keep in mind, these accountants, they're very specialized, they're very experienced, they can provide you help how to minimize your tax liabilities, how to reduce your taxes. They're using different methods. Like if you remind, we discussed some things in accounting, like inventory management. In inventory management, we discussed about LIFO, FIFO, and average method. These methods are used in these minimizing the tax liabilities. Similarly, depreciation methods, straight line depreciation method, and the declining balance method, double declining balance method, sum of the years digit method. You people know about all these things. You people already studied these things. I'm not going in detail of this thing. Just I'm telling you about this thing, that they can help you how to minimize your taxes. They will provide you a complete guideline about your tax planning, how to minimize your tax liabilities. All these things, the advice that he is providing, and the computations means he is calculating each and everything for you and making all these things with the inland revenue, means the requirement of the government. They are making it according to the requirement of the government. So in taxation services, accountants are coming, they are guiding you about your tax planning, how to minimize your taxes. They are guiding you, they are calculating the taxes on the company, and they are making it according to the law that government implements. The government they are making it according to the government law. So this is what this is taxation services. This is tax planning. The next service that auditor is providing is, sorry, accountant is providing is auditing services. Accountants, they are also providing you the auditing services. These accountants, they can be internal auditors, they can be external auditors. If it is internal auditor, so company will hire it. And if it is external auditor, so at the end of year, he will come and he will audit your company. So accountants with professional and practical background in audit can also conduct external audits and overlook internal record keeping. So here he is concerned, internal record keeping means that he can also be as an internal auditor. So accountants, they are also providing you with auditing services, external audit and internal audit. Then the next service that accountant is providing is provision of advice in internal control system. Now, what is internal control system? There will be a detailed chapter later on, I think it is chapter number 5. So there we will discuss in detail about this thing, but this internal control system, it is concerned about making your operations effective and efficient, making your reporting reliable, and following the regulations from the government side. How to follow the regulations, right regulations. So I'm telling you that internal control, it is concerned with how to improve the efficiency of your operations, how to make your reporting system reliable so nobody can do fraud or something else, mistakes, the chance of mistakes, it will be less, and the chance of fraud will be less. And it also helps you in following the regulations from the government side. Now, accountants may advise on improving efficiency of operations or internal system of control. So, improving the efficiency and effectiveness of your operations and the other things that I told you about that. This area of work can be particularly important for a client whose business is growing rapidly and needs control system to grow with it. Now suppose previously your business was of this much size. Sorry, the investment was $100,000. But now your business is growing. Your investment increased from $1,000 to suppose $4,000. So previously your internal control system it was not good, but now you need a very good internal control system. So these accountants, they can guide you about how to make your operations effective and efficient, how to make your reporting system reliable, and how to follow the regulations, right regulations from the government side. So when business is growing, so you need more effective internal control system. Previously your business was small, so there was there was the control system, but that was not that much efficient. But now you need, when your business is growing, so now you need effective internal control system. So accountants can guide you about all these things. Then there is another service that accountants are providing is financial advice. Accountants may be called upon to advise on the best way to finance, growth, and to manage working capital effectively. So these accountants, they can also guide you about how to finance business. How to finance means that which type of financing will be better, debt or equity financing, or the mix of these two. Okay, if debt, so which type of debt? Bank loan, I'm writing shortly. Bonds, which type of bond then? Okay, commercial papers. Which loan type will be better for your business? And if equity financing, so which type of equity financing? Partnership will be good, or joint stock company, issuing shares, registering your company, and then financing your company, joint stock company, sorry. So registering your company and then issuing shares to the public and then raising finance. You know about these things. We already discussed about these things, debt financing and equity financing. Debt financing means taking loan, and equity financing owner's capital. If it is sole business, so we call it shareholders equity. If it is partnership business, so we call it partners equity. And if it is shareholders equity, if it is sole business, so we call it owners equity. And if it is joint stock company, so then we call it shareholders equity. So these are different types of. Then Then joint stock company, it will be you will issue preferred stock or you will issue common stock. So which financing will be better for the company? So they will guide you about how to finance your business and what will be the procedure of issuing bonds, or how to take loan from a bank, or how to issue commercial papers, how to issue stocks, how to issue preferred and common stock, and how to register a company. So in this way, they can guide you about all these things. So they can help you in financing. If your business is growing, you want to grow your business, you want to expand your business, so they can guide you a good advice about these and how to manage your working capital effectively. How to, about working capital, that amount that is required for running the day-to-day activities of the business. So how you can operate your day-to-day activities effectively. So financial advice, they are helping you, these accountants, they are advising you how to finance your business. They can advise you in expanding your business, and they can advise you in managing your working capital effectively. Then the next thing is profit forecasts. What does it mean and why we are going to study this here? The main thing is, suppose how to, just a minute, this is home, I want to start a new one. How? Okay, leave it, we will use this. No. Okay, so we were discussing about profit forecasts. Suppose there is a business, a small business, and you want to purchase it. There is this small business, this one, this company A, and you want to purchase this business. So the person who is selling this business, he will make its profit forecasts and he will make its balance sheet. In balance sheet, he will show the position of assets, liabilities, and owner's equity. In profit forecasts, he will discuss the profitability of the business in the future. So if you want to sell the business, so accountant will make these profit forecasts for you, and you can sell your business to someone else. And these people, the other businessman, he will study these forecasts, these profit forecasts, and on the base of that, he will give you the amount, that what will be the value of this business. Listen again. There is a small business. Suppose Salam University wants to purchase another university, a small university. So what will happen? First, they will evaluate their assets. Then they will see what is the profitability of this business. So this service, so for this purpose, you need what? Profit forecasts of the future, that in the future what will be the profitability of this university, this small university that Salam University is going to purchase. So these profit forecasts are important for Salam University, because on the base of that they will pay the money, they will evaluate this university. So who will make these profit forecasts? These accountants will make these profit forecasts. So see here, what is he saying? Accountants may be required to report on profit forecast made in a bid situation. Bid situation means selling situation. When one company is attempting to take over another, here takeover means one company is going to purchase another company. Either of the companies involved may issue forecasts of the future profit levels. Now see, Salam University, accountants of Salam University, they will make the profit forecasts and they will also make their profit forecasts. Then they will share, and on the basis of that they will evaluate this business, that what will be the value of this business. May issue forecasts of future profit levels. Such forecast will usually be reported on by accountants. And who is making these forecasts? I told you, who is making these forecasts? Accountants are making these forecasts. Then the next thing is liquidations. Liquidations means when a business becomes bankrupt, or when a business is going to wind up its activities, close its activities, then what will happen? Accountants will come, they will evaluate this business, the value of all their assets, the value of their land, the value of their building, the value of their furniture, the value of their machinery, each and everything. Then they will find what are their liabilities. From the value of assets, there will be a bid on these assets. You know about bidding. Nilami, I think you people call it. So there will be Nilami, there will be selling of these assets. Whatever amount comes, we will pay off the liabilities of the business from that. If something is left, we will pay it to the shareholders. See here. This is a business. And this business becomes bankrupt. This business is going to wind up their activities. So first work that accountant will do will evaluate its assets. What is the value of their assets? Now after evaluating their assets, what will happen? There will be selling of these assets. Then they will check their liabilities. The money that is realized from selling the assets, first of all, they will pay the liabilities. If something is left, that money will be paid to the shareholders of the business. If that is a partnership business, so that money will be paid to the partners. If that is a sole business, so that money will be paid to the owner. So in liquidation, these accountants will be involved. They will evaluate the assets. They will check the liabilities. Assets will be sold. From the value which is realized, they will pay the liabilities, and the remaining money will be paid to the shareholders. This is called liquidation. Accountants are often appointed as liquidators, you can say, to wind up the affairs of a company. This involves realizing the assets, whatever amount the assets realize, paying off the liabilities will be paid, and returning the surplus, means if something is left, if any, to the shareholders. If something is not left, shareholders will receive nothing. So this is basically the work of an accountant. So I told you about different things: provision of accounting services, taxation services. They are guiding you about your tax planning, they are providing you accounting services, making your financial statements, they are giving you the service of an auditor, internal and external, provision of advice in internal control system, how to make your internal system effective and efficient, and making your reporting system, making a good reporting system for you, guiding you or advising you on how to make an effective reporting system, and helping you or advising you how to follow the standards set by the government. Then they can give you help. Financial advice means they if you want to finance your business, if you need money, so how to finance, which type of finance, they can guide you in expansion of your business, and they can give you advice how to effectively manage your working capital. And then we discussed about profit forecasts when you are taking over a business, or you want to sell business. So in that case, both parties will make profit forecasts, and then they will agree on some price. And then liquidations, when business is going to wind up their activities. So at that time, accountants are hired as a liquidating agent. We discussed about this in detail. So I think uh, I think it will be enough. 26 minutes video, so it will be enough for today. Assalamu alaikum.